We are back for another live episode of the Tech Behind FinTech, where we jump behind the scenes of the technology behind the financial services and FinTech industry. I have a special guest, a returning guest today. Very excited to have him, Chiagozie Iwu. Always a pleasure to have you on. Thank you for joining us today.
Always a pleasure to be here. Thank you for having me once more.
So this is a fintech expert, CEO of Exchange over Nigeria. He's a returning guest, so we're going to really jump into the cryptocurrency prices, the rise and fall, why, and get into that. For those that did not see our previous episode with Chiagozie, I want to go over his bio. So let me read this right now for the group. Chiagozie Iwu is the founder and CEO of CI Cryptosolutions, a company that owns and operates the NigerCrypto.com exchange and NigerPay.io payment gateway, as well as developing blockchain solutions and consulting for other firms. He is a seasoned blockchain enthusiast and possesses ample experience formulating derivative contracts as well as portfolio structuring in both cryptocurrency and traditional markets. He has also created a cryptocurrency index called BARWI30, which focuses on tailoring the index to cryptocurrency market characteristics and risk. He's a certified blockchain and finance expert with core focus on the financial applications of blockchain technology. It is always awesome having you because it just makes for a great conversation. The audience learns so much, and we typically have a lot of questions around this episode. Before we get it, so, usually in our show, we jump into the news and things of that nature. But before we get into that, last time you were on the show, we brought you on because the Central Bank of Nigeria imposed tons of regulations that actually we're going to get into. China's now imposing, in which it limited cryptocurrency usage in bank accounts across Nigeria. So a lot of the exchanges and startups were scrambling. How did you pivot? How did you adjust? What's the current state of Niger crypto in the midst of that type of regulation?
Yeah, of course. When the regulation came out, it was a bit of a shock, but like we'll have it, we always have to innovate, right?
Yeah.
So basically, what happened was the stopped us from directly banking with banks, right? The blocked banks from banking cryptocurrency exchanges, and basically any business related to cryptocurrencies, basically. So basically, what we did, now what most exchanges did is that we switched to some form of P2P model, right? So you have complete total P2P model whereby everybody buys and sells crypto directly. You have sort of the mixture of the centralized P2P model, right? Which we kind of use at Niger Crypto, but still trading with normal exchange methods and the order books, basically. So it's been a ride. The regulators are looking for a way to harness the cryptocurrency space. The SEC is trying to look for a way to regulate the space. The central bank is kicking against the space. So it's been a ride. It's been a major ride over here in Nigeria. I believe.
I mean, look, I'm going to definitely call it out because I think the way you're able to pivot and what's going on in other countries right now, I mean, specifically like a country like China who's banning it, it seemed like you created a model that still works, that avoids the uses of banks through this P2P network within your exchange. That's very interesting. So in diving into it now, if I owned Bitcoin and I wanted to sell it on your exchange right now to get that fiat in my bank account, it's no longer from your exchange directly in. It's going through some intermediaries. Is that accurate?
Exactly, right. So what we did here is that we eliminated the need for centralization, right? Which is the whole point of the crypto space, in the finally, right. So basically, what we do that, yes, when you sell your Bitcoin from let's say the Nigerian naira on the exchange, right? what you're getting is a Naira stablecoin. We're not giving you Naira, right? So what we did is that we have a P2P format whereby once you request a withdrawal, you are selling that your Naira stablecoin to another individual on the exchange, not us right now, right? You set it to a pre-vetted individual. There are lots of them with different commissions, right? I could decide to charge 1%. That person could decide to charge 200 Naira fixed rate. So you are selling directly. And once they buy the stablecoin from you, right, they then send you Naira.
And what they send you Naira to your account, but just to make sure they don't run off of my Bitcoin or my crypto, you put that in some sort of escrow on the exchange.
Exactly. So what we do is that we do not release the stable coins to this individual, right, until the sent out the Naira, and we act as an escrow that approves the send. Of course, most of the time it's seamless. Once in a while there will be problem, especially with the bank networks and all that. So we just make sure everything goes smoothly for both the user and the P2P agent. And sincerely, I don't think I've had a situation where a user actually complained about us that, this is what happened here. This is what I did not get my funds. It has been 100% smooth, right? All right, go on.
No, I'm sorry. I didn't mean to cut you off. I was just going to say, like, what's really ingenious, I think, about that is that you decentralize your exchange in an already decentralized
exactly.
Market. I mean, it's pretty cool, man. It's pretty awesome, actually. That's
exactly.
Like, look, I'll be the first one to say I think the model that you created within your exchange, I think, not necessarily for over here in the States, because we don't seem to have that issue as of right now, but other countries that are maybe putting a regulatory around their banking, that might be a model that can be replicated in exchanges over there.
Of course. In fact, we at Niger Crypto we've extended this particular service also to Kenya, right? And we are targeting before the end of Q3 2021, we would have offered this service to at least eight more African countries. Right, so the target is to be in the whole of Africa. So whether you have a banking problem or not a banking problem, we should be present by continuously decentralizing processes and have it decentralized in such a way that you do not need the banks, you do not need centralized bodies to run. And hopefully someday we will have a day when you can spend stable coins directly without the need to actually run anything through a bank, basically. So
pretty interesting. Look, I'm going to be keeping in contact with you, of course, as I've been doing. I'm really interested in the developments, and I'm interested in working with you in some capacity. So let's jump into, like we always do, let's jump into some news articles that we found interesting. So we're going to talk about one fintech startup, and then we're going to really start jumping into the crypto conversation because I'm really interested in your take on it. The first news article of the day that we saw interesting: Klarna shuts app down after users report being logged into random accounts. Wow, the cybersecurity person in me right now is like, what the hell, dude? The fintech allows shoppers to pay later for items bought online. It raised $1 billion in equity funding in March. So basically, the problem is users began reporting issues with their app on Thursday morning, posting screenshots showing they were able to see the balances and account details of other users. Comment from the CEO: so sad and frustrated to realize that we have had a self-inflicted incident for 30 minutes affecting the privacy of some of our users. Full attention from all colleagues to bring back things to normal, take actions to avoid this going forward, and communicate broadly. He later added the company, 90,000 of the users were infected by this glitch. What are your thoughts?
Wow, I can imagine what it might. I'm just imagining that maybe they had some sort of office. Let's assume they're working physically in the office. How crazy it would have been over there, in the back end, among the back end devs, basically. Yeah, my take on this is like, this is what we'll talk about. Like, first of all, we don't know whether there's a compromise or a bug, right?
No,
I think
okay.
More like.
It's saying it's self-inflicted, so it's definitely internal. It's not an external actor. Just to add that in.
All right. So basically, it was a bug, right? So you know, when you build processes, when you build processes that are scalable, right? That you're scaling, begin with 5,000 users, you go to 100,000 users, to a million users, to 10 million users. You're migrating from one database to the other. You're migrating. Okay, I was using this particular server, now I'm using this larger server. Like, you face problems, right? This is why a lot of us always tell our tech team, you test. Work with sandbox environments, like, for weeks before rolling out anything new, right? So basically, I would say there's a bit of carelessness on the side of of their developers and database managers, right? But I also understand that sometimes these mistakes happen, and from what I read, it seems they arrested the situation quickly, fast, right? Which is not something that is normal sometimes with other startups when this type of things happen, but. As I would say, it could have been avoided, basically, and hopefully they would work in this, not having such a thing in future. And also, I think this is a violation of this is a violation of GDPR, because I believe if all GDPR principles were followed pragmatically, you may not have had something like this, basically. So
Not
that's
all great points. Like I said, at the end of the day, I could put my consulting hat on. So what we do, like the whole shift left concept, testing early, adding security processes early on to your development. I mean, it's methodologies about this. Yeah, having users having access to other users' information, I think that's totally unacceptable.
yeah.
But yeah, so that's my take on it. We have a comment from our audience. All right, based on the comment earlier that you talked about, decentralization is key. Definitely agree 100%. Thank you very much for your comment. Keju, did I pronounce the name correctly? Help me out here. Chiagozie.
Keiju Abiola.
Okay, I see. Okay, so I got it correct. That's
All right.
one thing about both Nigerian. One grew up in the States,
Yeah.
one obviously stays. So
Okay.
my accent's not 100%. That's one thing I always try to work on. All right. What are we
Yeah.
jumping to? What are we jumping to next? All right. The next one. Ethereum will be completing a transition to proof of stake in the upcoming months. Currently, they use proof of work, which takes a lot more power than proof of stake. And before we jump into, we're going to talk about the overall article, but they're going to be making this migration in the next few months. Can you explain to the audience the difference between proof of work and proof of stake?
Yes, actually, this is a very interesting topic that many newbies in the crypto space do not know so much about, right? Okay, so basically, proof of work, right, is what Bitcoin and most of the popular cryptocurrencies, that's the protocol they use, right? Whereby a block, right? I'm going to try and simplify this as much as possible, right? Whereby a block is created, right, by who has like by a bunch of computers trying to solve puzzles, right? So the more computing power you have, the more hash rate that can be generated, right? The more your probability of you determining the new block, and the more you validate transactions and end transaction fees. So what are we saying now? You need ASCIIs, right? There was in the earlier days of Bitcoin, you could use CPUs, right? But I don't think that's definitely not possible. I think we upgraded because you could now use GPUs, but
Yeah.
also that is no longer attainable. So you need very large processing power, right? So, and this consumes a lot of electricity, right? The more processing power you have, the more electricity you consume. So you have this large you have this large ASCII built rooms trying to work on the next puzzle, trying to computers trying to solve the next puzzle to generate a block. So that's basically proof of work, right? And that's one of the reasons why people say, okay, proof of work might not be sustainable because of the electricity consumption. Maybe we'll come to that, right?
Yeah.
But proof of stake sort of tries to solve this problem by saying, oh, instead of computers trying to generate the new block, right, and solving puzzles to generate a new block, why don't we give it this power to people that own this particular the stakeholders within the system, the people with the highest amount of this token, the people with the highest amount of these cryptocurrencies. So what does it say? Let's assume there are 100 tokens, right? If I own 30, if I own 30% of these tokens, it means I have 30% power, more power to create a new block, and I have 30% more power to validate transactions, right? So this is all individuals kind of voting, right? Not yeah, kind of voting based on what you have. It's like a board. The more shares I have, the more voting power I have, right? So you're voting based on the amount of tokens you have. So this consumes um way, like, in fact, electricity is just used for basic functions, right? So it consumes like less than 0.1% of the electricity proof of work protocols actually utilize. So I'm now talking what less than 1% of 1%, or rather less than 10% of 1% in this case. So um by this you're streamlining the process, right? And of course the proof of stake has not become more widespread a bit. Of course you have a couple of cryptocurrencies currently using it, and from what you said, Ethereum has been working towards moving to a proof of stake protocol, right? And sincerely, a lot of us have been waiting for that. I think the original timeline was February 2021, but it had to be shifted because it's a very complex process. It's a very complicated process moving to proof of stake, right? And this would make transaction fees, right, lesser on Ethereum, because validators will be of Ethereum has lost a lot of they've lost a lot of market share in terms of token creators because of this, right? They have very high transaction fees. And one of the reasons they have high transaction fees is because proof of work is unsustainable, right? People still have to convert their cryptocurrencies that they earn. That's the miners in this case have to convert the cryptocurrencies they earn via mining into fiat to be able to pay for power. But in proof of stake, that is not needed. So it would cost the fees to be extremely lower, right? And hopefully it will be a more sustainable model going forward.
No, thank you for that explanation to the audience, and definitely, guys, let me know if you're listening. Definitely chime in. Happy Friday to everybody. We love your comments. We love your interaction on the show. Nah, good stuff. So let's move on to the main topic of the day. So over the last 2 weeks, look, 3 weeks. I mean, I think when Coinbase went public, that's when Bitcoin hit 64,000. Then we saw it go down to 30,000, and a
Yeah.
lot of the altcoins, Ethereum, followed suit. Ethereum hit a high of like over 4,000. I think today's prices, it's at 25. Let me get the number. I think the prices today were like around 2,500 or so, or 2,700.
Yeah,
Yeah,
within
around
that range.
that, within that range. The big question: why? Obviously, we saw Elon Musk. We saw the comments that he made. We also, for those that don't know, there's a group called ESG, and I think they're dealing with a lot of what does it stand for? I think the power,
Envir-
like people.
Environment, social, and governance. Environment. I'm not sure about the S, but
Yeah,
the E, environment, then
yeah.
G, governance. Yeah,
Yeah, you're right. Environmental, social, and governance is a
governance.
growing
Yeah.
investment methodology for companies who want to be seen as focused on the long term, forward thinking leaders in their industry, corporately responsible, better managed. So a lot of that has to deal with the environment. Okay, we have some Happy Friday shout outs. Let's get to it. Happy Friday, Jeff. Happy Friday to you. Thank you for joining every week. He's here. It's my guy. Uh, Elijah, happy Friday. Thank you for joining. We appreciate you. All right, let's we have a comment from YouTube actually. Slyman, from your explanation, proof of stake will reduce gas fees, meaning more adoption for ETH. Do you think this will cause ETH to flip BTC? Secondly, will you want another coin to flip BCC? Wow. Good question. You want to take that on?
Okay. Yes. This is actually a very interesting question, right? I have always been of the notion, like, Ethereum was one of. I love Ethereum. Let me just state it like that. I love Ethereum, right? It's a project I followed from day one, right? Back in 2015, I followed the process. I bought Ethereum, or rather, I earned Ethereum when Ethereum was less than $1, right? So basically, but it has never been on a sustainable protocol, right? The proof of work has never been a sustainable protocol. Network gets overloaded, fees get higher. But with the proof of stake, it's going to streamline a lot, right? And the funny thing is that a lot of the projects that are trying to do what Ethereum is currently doing has never been able to completely achieve the scope Ethereum has. So they've been able to take market share out of Ethereum because of the deficiencies which are linked to the proof of work protocol, right? So yes, it is going to be better for Ethereum when they move. In fact, I will stake a lot of my money on Ethereum shooting up once this happens, once these migrations happen, right? But but saying it will flip Bitcoin, right? That's a long shot. I'm not a speculator. I don't like speculating, right? I don't think it might be possible, right? Because the growth of the crypto industry generally reflects a growth in the price of Bitcoin, and Bitcoin has more of the functionalities of storage of wealth, right? Ethereum has a utility in terms of being a utility for smart contracts and token creation and things like that. So saying it will flip Bitcoin may be a long shot, but I think these top two, Bitcoin and Ethereum are here to stay as the top two for a long time.
No, great response. Interesting that you've been following Ethereum before it was under $1. So we're not going to do the math on my man's bank account, but obviously he's done very well. He's done very well. But
I supported $2.
with what you just said, though, your explanation in terms of the future of Ethereum is in line with Kathy Woods, who is a major investor. I think ARK is her company, and she's also. And so if you guys Google Consensus 2021 Kathy Woods, you'll get all her comments in terms of what she thinks about Ethereum and following the developers. So, obviously we can't speculate. Like, no one has a crystal ball. If we did, we'll all be billionaires right now. So at least I'm not. I can't speak for this my guess.
Yeah, definitely not one. I want to be one.
Okay. So, but no, great question. So let's jump into it. I mean, there's a lot of things that happened over the last few weeks in terms of the highs in Bitcoin from 64, Ethereum for 4K, dropping down, the fluctuations, and one of the reasons why I wanted to, this is all recent news, and I always mention to you, anytime this stuff happens, I want to get you on board, get your take. You're an expert in this space, and you're running an exchange. What are your thoughts on the fluctuations? Like, why?
Wow, for the past 2 to 3 weeks, the crypto space has been like volatility is is an understatement, right? Of course, like you say, like you said, Coin it rose with the Coinbase IPO. Generally all markets, whether it is crypto, the stock market, the foreign exchange market, the market for oil, work on sentiment, right?
Yeah.
Sentiments move markets, right? If there is a negative sentiment, you have a negative movement towards the market. If you have positive sentiment, you have positive movement towards the markets, right? So the
Absolutely.
Coinbase IPO, Elon Musk adopting Bitcoin as a payment option, a lot of people acknowledging Bitcoins, right? A lot of institutional investors coming in. These were all positive sentiments, right? So Bitcoin shot up to as high as 64K, right? So all of a sudden, you then get Elon Musk tweeting that, oh, Bitcoin is not environmentally sustainable. And that now brings in negative sentiment. Now, one thing about the market, right? And this is very prevalent in the crypto market because crypto market is, I think, this is the market where you have the highest number of, or rather, a greater proportion of retail traders controlling a lot of volumes within the market, right? So, when things come in as fraud, like the reaction is extremely high, right? So, what Elon Musk said, is it true? Yes, there is a truth to it, right? If you analyze it critically, there is a truth to it. I know the crypto space is filled with libertarians, right? That do not want to hear things like, yeah, like environmental sustainability and things like that. But yes, we have to work. Now, is there a way to work towards miners being environmentally sustainable? Definitely. You understand? Definitely. So basically, the people took that tweet to mean more than it did, and of course, there was panic in the market. And just like as if it was timed, it was like bad timing. You then had China coming in with his own attack also on the crypto market, saying it is banning. Of course, it's not the first time China is doing this. I've been I've been aware of the crypto market since as far back as 2012, 2013. I can tell you that China has brought out news like this like five, 6 times, and it has never damaged the crypto market. In fact, it grows
Interesting.
stronger. It grows stronger after this. But usually, the short-term impact. In fact, I did a research of this. On this is it's actually published research on this. Market reactions to negative sentiment and news announcements, both short-term and long-term. I think that if you Google my name on Google Scholar, I think that research can be seen there. So, but it's something that happens all the time, right? And you you have the situation China say this, and oh, you now have a negative reaction. You now have a lot of sell-off by panicking Chinese traders and also traders from all over the world saying that, oh, government, and then you now have other governments, not just China. At least this morning we had a BOJ, the BOJ chair, say something bad like, oh, cryptocurrencies are not so good in Nigeria. Our central bank governor has always seized this any opportunity you give him to be on the camera, he has to attack cryptocurrencies, right? So um basically you had a lot of institutions, you had institutions like HSBC, which I think is very dangerous for HSBC because some of the biggest banks in the world, JP Morgan, um um a couple of other banks, even Goldman Sachs, right?
I
A
think
couple of
I,
them.
I think Bank of New York as well. I think from a credit card aspect, Visa is going. They have a big invested a lot in startups and have programs around that. So there's a lot of definite, and we even talked about this on the show for a couple of weeks. There's a lot of banks going that direction. So HSBC, but it's important to know, right? So one of the things that HSBC also said was they're for centralized. Let me
Stablecoin.
get the
Yeah,
stand for stable coin. So they said,
yeah.
what it in the interview, Quinn, one of the CEO was more supportive of central bank digital currencies, which several countries, including China and US, are working on. So CBCs can facilitate international transactions and e-wallets more simply. They take out friction costs and they are likely to operate in a transparent manner and have strong attributes of stored value. So in terms of CBDCs, the central bank digital coins, they're for that. They're just not for the cryptos like Bitcoin,
Coin,
Ethereum, and so forth.
exactly. Exactly. Which of course, the utility of stablecoin is quite obvious, and and believe me, when it comes to international monetary remittance, I believe that it is the future of monetary remittance, stablecoins that is. But looking at assets like Bitcoin and Ethereum, I'm saying we had a couple of years, Jamie Dimon, the CEO of JP Morgan, right? He came out. I think he
I
came out
remember
against
that.
cryptocurrencies around 2015,
I remember that.
2016 or so. Like I remember that interview. I watched it from beginning to end. When I heard Jimmy Dimon talked about cryptocurrency, I was more interested that he was talking about cryptocurrencies than actually he was saying something bad about it, right? Because then we wanted somebody to talk about cryptocurrencies. So, but 2 years later, 3 years later, JP Morgan in their wealth management divisions now create separate entities for crypto managing cryptocurrency portfolios, right? You now have a lot of portfolio managers within these traditional spaces adding cryptocurrencies to the portfolio of the users. So it's not something you can just say, oh, I'm completely ignoring, yeah, because the people you're managing the wealth for are actually interested in this asset class,
Yeah, I mean
right?
that,
So
the rule of the number one rule of business, you have to give the people what they want. We have a
exactly.
couple of comments from the audience. Let's get to it. Comments and questions. Author Butchulum says happy Friday. That's my guy. Let's see what else. Happy Friday to you too. Question from the audience. I think this is actually wow. This is our first Twitch question. Usually we have YouTube and LinkedIn questions. This is our first Twitch question. So thank you very much for that. Do you think cryptocurrency is the final stage of currencies? If not, what do you think the next big thing in currency is? Uh, hmm,
I
interesting.
love this question. I love this question. The person asking this question is in 2070. We're still in 2020, 2021.
You know what? I have a response. I'll let you go first.
Okay, basically, let me just be quick. First of all, the world we're consistently evolving, right? We've evolved from the days of barter trade to use of gold to use of centralized paper, basically, and to use of everything. So we keep evolving, right? While I think cryptocurrencies is going to be a standard for at least the next hundreds of years, but I don't rule out like improvements on the technology. No cryptocurrency is perfect for payment currently, right? So you need consistent improvements of the technology, right? So I believe that a lot of improvements are going to be built around cryptography, right? So saying that, yeah, maybe it will be cryptocurrency kind of, but it's still going to be centered around cryptography, and you see a lot of payment systems emerging as the days go by. There are a lot of startups building very impressive projects, and I think we'll get to see a lot in the coming years, basically.
So I want to do a shout out to a startup in particular that I'm associated with, both as a investor and also a client situation. Ampicash, they have a way of performing transactions from in the pennies. Right now, you can't buy you can't do a credit card transaction for something under a certain amount because the fees, it doesn't make any sense, right? So they have a way of transacting for payments in the 10 cents, 5 cents bracket.
Wow.
So it's a very innovative technology. Actually, the CEO is a Nigerian guy, a good friend and colleague of mine.
Oh.
Yeah. So hopefully he'll be gaining some traction, and I'll have him on the show in the future. I've been inviting him. He's on he's doing some stuff right now, but yeah, it's a really interesting technology. So shout out to him and Ampicash. But yeah, I mean, who knows what the future is? You have a lot of innovation going on, and we'll see. But great question. Thank you for being in 2070 when the rest of us are in 2021. Question from author. A question for Chiagozie. Why would the U.S. government adopt Bitcoin when greater than 75% of miners are in China and Belarus? Good question. What are your thoughts?
This is actually a very, very interesting question. Well, first of all, I want to clear one notion, right? We do not need governments to adopt cryptocurrencies. Okay. It's actually not meant for them, right? You understand? Like any government adopting cryptocurrencies is not. I think it has a null value to cryptocurrencies, but I don't think it's a plus. I don't think it's a minus for cryptocurrencies, basically, right? So but I believe maybe what you're talking about is regulation, whether the US government could. The US government actually has more friendly regulation towards cryptocurrencies than China, and then many of our African countries, right, especially Nigeria, right? And yes, of course, 75% of the miners are in China, but let's not forget the market for mining is actually a free market. There is free entry and free exit, right? Now, China is cracking down on miners, right? And American miners are working towards models that are more environmentally sustainable. So I believe you will see going forward a situation whereby that market share for mining increases more in the US and decreases a bit in China. Regardless, this is a decentralized technology, right? So even if all the miners are in Iceland, let's even assume in let's use a small country like Iceland. Even if all the miners are in Iceland, in which a lot of miners are actually in Iceland because of the cold weather and all that. So
it makes sense with the servers.
Yeah. So
sorry.
It's okay. So basically, it does not affect it because it is a decentralized technology. However, right, you have the risk of one person getting control of the market, being able to have what you call a 51% attack on the market, right, whereby the mining power is centralized in one entity, right, and they can destroy this particular currency, right? So if that happens, Bitcoin is not the only currency, and this is one of the criticisms we have of the proof of work model, right? And we do not believe that anybody with the incentive to actually have these coins increase in value, because I believe miners will actually want to have those coins increase in value, because the more the miner rewards reduce, they need it to be higher to be actually sustain their models, right? So it would not be in the best interest to destroy the technology, right? And I think the US has a lot of catching up to do when it comes to cryptocurrencies, because a lot of evolution happened in China, Japan, and a lot of countries, and I do not think that the US government will ever have a complete hostile, like we have maybe in Nigeria or in China, a complete hostile approach, right? The SEC has gone too far, right? the cryptocurrency industry in the US now have a strong lobby, right? We saw a lot happen during the Biden campaign in terms of crypto donors, and I think it's positive going forward in the US, basically.
Interesting. I know from Venezuela's standpoint, they migrated over to Bitcoin from a government perspective and just for their currency because, you know, it was extremely helpful. I mean, you have to, instead of carrying like loads and loads of fiat to buy basic things, it's just a wealth store. So it's really, that was interesting. We talked about that a few weeks ago. Xavier Williams, the transition to digital currency is inevitable. The gold standard in fiat money isn't feasible for much longer, especially if humans plan to move to and monopolize Mars. We're talking about, okay, we're next leveling it here. I love it. Yeah. Thank you for the comment. And I want to also thank the audience. This is really great interaction, type of interaction we love on the show. Thank you very much for all your comments. Thanks for watching. Appreciate you guys. What are your thoughts on that comment?
Well, in fact, these are very interesting theory, right? When we were talking about, like, I was reading this sort of like a opinion piece, right? I don't know, I think it was New York Times or so. They were talking about the talents that will be needed, right, when you're going to the talents that will be needed when you're going to Mars, colonize Mars. They're talking about the biologists, geologists, like the specific field within the sections that will be needed. I was thinking, if you're going to have a community, if you're going to have a social community that's going to trade with each other and form sort of governments and bodies, you would need a currency, right? And for such a community, a centralized currency is going to be very dangerous. And I remember having this conversation with someone that if Mars is ever going to colonize, everybody's going to use cryptocurrencies, because that's the only thing that makes sense in such a community, like in such a new community. You don't want things that would be heavy. You don't want things that will take up resources. You need things that will take up less resources and more power allocation of resources, right? So basically, yes, it's inevitable. The transition is inevitable. If governments want to attack digital currencies, I believe that government-made digital currencies are not going to be as cool as it's not going to take off as much as they think it would be, right? Because remember, these cryptocurrencies belong to the people, not to the governments, right? It's not a coincidence that Bitcoin came out, was created in 2008. It's not a coincidence, right? Anybody familiar with the financial crisis understands what I'm talking about, right? So basically, you can never have a situation, right, whereby in the next 100 to 200 years, people are still trying to peg money to gold or still trying to peg paper currencies. So I believe, as you said, is definitely the future. And if we're going to colonize other planets, even if we ever go beyond the solar system, this is how economies will be structured, basically.
Nah, great response. Listen, I have a couple of some stats I want to read out just in terms of energy consumption. Very interesting stuff. Bitcoin has a carbon footprint comparable to that of New Zealand, producing 36.95 megatons of CO2 annually, according to Digiconomist. The cryptocurrency consumes more electricity than the entire annual energy consumption of the Netherlands. That's from Cambridge University. So it consumes as much power as Chile, 77.78 terawatts. So just to put it in perspective, so that's 1 terawatt is 1 trillion watt hours. A couple of stuff. And last stat, a couple of more. So the Cardano, that coin, and other digital coins rely on proof of stake consensus mechanisms where participants buy tokens, which allow them to join the network. Cardano cryptocurrency network consumes only 6 gigawatts of power versus the 77.78 we talked about with Bitcoin. Back to our proof of stake comment. Last stat, Digital Economist estimates that the energy footprint of one Bitcoin transaction is equivalent to 453,000 payments on the Visa network. So just interesting stats. And listen, we definitely want to have a future show on energy consumption. I'm fascinated by that. I'm talking to Medina Williams. She was a previous guest talking about energy and just diving into that whole thing. Those numbers interests me. What are your take on some of those stats that I just read?
Yeah. You know, one thing about statistics is that I could use statistics to make I can use
Of
the same
course.
statistics to make two different points, right?
Yeah.
Now it's when you contextualize it with individual country consumptions, right? These countries do not consume most of the power in the world. If you take it as a percentage of global energy consumption, it is less than 1% of global energy consumption. That's what Bitcoin consumes actually, right? So even at that, I still believe it's too much. Like I think the number is 0.75%, which if, of course you could be compared to a small country like Netherlands. Netherlands has a population of less than 20 million or 10 million, right? Chile does not have so much industrial capacity like the US and China. So if you use it as a percentage of, let's say, the UK, the US, Chinese power consumption, you're going to make more because these are the countries that actually consume over 50% of the power generated in the whole world. So I think the conversation shouldn't be the amount of power Bitcoin is consuming. The conversation should be how do we move miners to more sustainable energy consumption? How do we move miners from mining on grids that consume coal, that consume oil, the gas, that consume things that are not good for the environment, to using solar, wind, right, and more renewable energy sources, right? So if we have let's assume the total amount of power in the world is 10,000 megawatts, right? I'm just saying, right?
Yeah, of
So
course.
and Bitcoin is like 1,000 megawatts, right? The problem is not the amount as a percentage of the total energy. The problem is, are we using renewable, is Bitcoin using renewable energy options? Because if Bitcoin was even taking 90% of the total world consumption and it's using renewable energy consumptions like solar and other means of generating power, then they are not contributing too much to carbon emissions. So yes, I think there is a problem with miners, and miners need to move to sustainable energy. But so should a lot of industries, right? So should a lot of industries, and it's not just the cryptocurrency industry. A lot of industry, and believe me, with many altcoins moving to proof of stake, you are going to get less of this problem. Ethereum is going to reduce its power consumption by over 99% when it moves to proof of stake, and we are actually solving the problem in the crypto space, right? So hopefully eventually we'll see more of this conversation take this line rather than just saying, oh, it's taking up a lot of power. In Africa, here in Nigeria, for example, we have over 12 hours of sunlight. Okay, let's say about 12 hours of sunlight a day, right? I personally have a solar panel in my house, right? And it gives me like electricity all day round, right? Stored electricity in the night, and we have 12 hours of sunlight. If miners or mining rigs are set up in countries like this, you could generate the same amount of power, right? Like you would do using let's say in oil in the US or something like that. So there are these options basically.
No, I mean everything you're saying. I mean, that's an excellent point that you brought up. Thank you for that. I mean, if you look at it from the car market, right? We're moving in 10 years. We're going to be electric vehicles. That's a
Of
it's
course.
you know. I mean, you can fight it as you want, but it's happening.
Definitely.
It's
Yeah,
happening.
it's
It's
gonna.
moving in that direction. So to your point, it yes, we have this energy consumption, but the question is, how do we make it renewable? How do we think smarter about it? How do we provide better energy resources? So even if it's taking a lot, we're doing it in a smarter, more efficient way. And that's a great point because the focus has been a lot on cryptocurrency energy consumptions, but like the point that you just mentioned, other industries have the same issue, right? And we've been finding smarter ways. And all I can think about is the automobile industry, right? And what's
Yeah.
happening from an EV perspective. And I don't want to misquote it because I read it, but I don't know. I don't know if it's Netherlands or it was somewhere else. They have right now in one of these spots, they have over 51%, over the majority are electronic vehicles. And what happens, they put a lot of regulation if you want to drive to anything else. So it just
Yeah.
makes life easier for EV. And I like I said, I read different things and I don't want to miss the country. So I don't want to say the exact one, but that did come out that they just achieved that global feat that no one else has done so of yet. Look, amazing stuff. I'm always I always love when you come on board and give us some insight. It's always a pleasure having you on, and I look forward to additional conversations as things jump off. I'm gonna bring you back on here. Look, break it down for us, and let's get into it. So thank you very much for being a guest on the show. I really appreciate you. To our audience today, I know because we're at 12:45, we're a little bit over, but I like to keep interesting conversations going as long, but I have to be respectful of this man's time. He has a lot of things going on, as you can see. So once again, thank you for the audience members. Thank you for tuning in today. We really appreciate you watching, really appreciate you, all the comments and so forth. Shout out to all the different platforms that viewed it, from Facebook, YouTube, Twitch, and of course, LinkedIn. Definitely appreciate our audience members. With that, in the US here, we have a holiday weekend approaching. So I wish everyone a happy holiday. Before we take off, Chiagozie, please let the people know how to contact you. Shout out any one of the exchange, different your businesses, and please go for it.
Okay, basically, for anyone that has any questions for me or want to interact or partner with us in any way, you could always reach me out on my LinkedIn, Chiagozie Iwu, or could always reach me on email, chiagozie@nigercrypto.com. And you could always find our exchange, of course, those in Nigeria and Kenya, and hopefully other parts of Africa in the coming weeks. You can use our exchange for fiat to crypto exchange. You can find us on nigercrypto.com. And we also have a B2B platform that enables businesses accept payments on nigerpay.io, right? It's sort of like a payment gateway for both small and large businesses with different integration tools and all that. So we're always available. The website, our support is on 24 hours, and we're always reachable. And it's always a pleasure to be here, Nnamdi. Thanks a lot for having me here once more.
All right. I'm going to shoot you an email, be in touch with you. Guys, take care. Have a great holiday weekend. We are officially out.